Hello everyone, welcome to the BISP Solutions. Very good evening. My name is Anjali Singh Chauhan, and today we will try to cover the whole financial planning in one go, because already we have done each and everything in the financial planning, from the enable features, configuration, metadata and data load, driver and assumptions, till we have completed in the yesterday's session expenses planning under the financial planning. So after the revenue and expense planning under the financial planning in the EPBCS. So today what left there is, we would like to discuss about the balance sheet planning. But in the yesterday's session, I think the data validation I have to show you guys, right? So for that I have already ready with my prepared with my file. So let me show you that once. After that we will try to cover the balance sheet planning. Okay, so initially what I will do, I will switch to the application. I have already logged into my instance with the credentials I have, and this is our application, EPBCS _ financial planning, and you can see this cluster financials. When you click on that, you will find revenue, expense, balance sheet, cash flow and analysis. These cards we have. So already we have completed these two, that is revenue and expense. Today we would like to cover the balance sheet, but let's do the data validation of the expense planning, which we have done yesterday. So from here I would like to select my product and services on which my data has been loaded in the application. And you can see the calculated and adjustment over here. Okay, so let's try to apply one trend. This is, I am just revising it, else it is already done. We are just checking whether anything left to be done. Okay, I think the application has been tampered, so no worries. We will understand with the help of the data validation sheet. You can see my previous video for that, like for understanding how can we do the expense planning applied on the application or not. So figures are visible over there, and when I connected to Smart View and use the same POVs as I have used in the application, so what I got these figures, and one more thing we have done, we have prepared a business rule, so that I have used from here, applied that rule, and with the help of my drivers my expenses are calculated. So this is my calculated sheet on which the figures are fetched from the application and the formula, and this is the direct input sheet where you can see I have directly load the figures, write the figures manually, and from here I have applied the normal formula, okay, for checking whether the calculation from the application is correct or not. So what I see, I will do one in front of you guys. So let me connect first with the Smart View. So this is our cube OEPFS under which we are doing the financial planning, and when I click on that, you can see this option ad hoc analysis. So click on that and reuse the sheet contents and POV both. So figures are missing because we have to apply the formula. This is the driver's figure which we have load into the application. Okay, you can see the number of hours of calculation is 10. Okay, and consultation fee per doctor is 550, number of doctors is 20. So with the help of these three drivers we can identify the doctor's salary expenses. Numbers of hours of consultation means how much time my doctor is normally taking to consult his patients. So this is 10 hours normally, and it is actually taking the average. Okay, and you can put the figures and check what kind of figures it is taking. In my case I have used a trend current year actual average. Okay, so that is why it is 10, and the consultation fee per doctor is again average 550, and number of doctors is 20. So let's check first in the direct input form. So when I applied this here, so what I will get, ten, that is number of hours of consultation multiply by consultation fee per doctor multiply by number of doctors, that is 20. So what we will get, 110916.67. You can see this I have calculated manually. I have not used any kind of business rule over here because I just want to match both of these sheets, and I just want to find the difference between both of the sheets. Okay, so this is the direct input. Now we would like to run a business rule. So go to the business rule and select which business rule you have created. So we have created total expenses calculation rule. Click on launch, close, and refresh. So you can see my when I run my business rule, so what I get, let me close this. Yeah, so you can see the figures we got automatically. We have not manually put the formula because we have run the business rule. So with just one right click we are getting our figures ready with us. So let's match both of these. For this, what I have done, go here and select figure from the calculated sheet, that is from the application, minus figure which we have calculated manually, and let's check whether there is any difference or not. So you can see this is 0. That means no difference we found, because whatever we have calculated manually is absolutely matched with the application. So what does that mean? That means whatever rule we have applied over our application, it is absolutely correct and it provides the correct figures to us. Similarly, I have applied the same thing for whole of these expenses. Here I have used 4 expenses, that is doctor salary expenses, staff salary expenses, hospital bed expenses, and electricity expenses. So let's check for all these 4 one by one. This is staff salary expenses. So this figure comes from with the help of business rule. Now I would like to check it manually. So I will click here, and staff salary will be calculated on the basis of these drivers, that is number of staff and salary per staff. So number of staff we have, that is 18, multiply by 15,000, that is salary per staff. So what we will be getting, 268750, and it is same among all the months from January to December. Okay, so let's check the variance. Again it is 0. You can see calculated sheet minus direct input sheet. The formula is applied to whole of the sheet. Okay, now we will check why it is showing this difference of 625. So let's cross check this one. Okay, so our cost per bed is 550 and number of patients using bed is 13. So here I will try to manually calculate this. Cost per bed multiply by 13. So it should be 7150. Okay, and Okay, why it is showing that difference? Because basically the amount of cost per bed is 500, but here as I applied a trend, that is current year actual average, that is why it is taking 550. It is taking basically the average of whole. I will show you how they calculate the average. This 500 for whole of the 12 months. Okay, when we will click on that, you will find this is our 6000 is the sum and average is 550. Okay, and let's check it again with on the application. I think someone has tampered with the application because it is not showing the figures. Let's re-upload the figures and check it again. Because yesterday we can see the figures which we have loaded, so maybe someone has tampered it. So I will re-upload the data to the application. This is my expense data file. Click on validate, click on import and close this. Check in the jobs. There is one error. July and January. Records process 18. Okay. Let me check my data file. So this is my data file and clearly you can see the cost per bed is 500. Okay, and we have also checked how this 550 comes current year actual average. So when I take 500 multiply by 13, then figure is 6500, and when I take 550 multiply by 13, then figure will be 7510, and the difference of both of these is showing over there, that is 650. So go back to our data validation file and let's check the difference. 625 is the difference it is showing, and the 50 is taking from cost per bed. Again the same issue. Okay, so I just want to re-upload this. Let me again load my app backup. Migrate the data backup we have. This is already present here, that is why it is showing that error. So from here I will import this. Till then the backup is completed. We will again check. So now you can understand why this 50 rupees error is showing, because that is taking the 550, that will be our average value, but in our direct case we have directly taken the exactly same value which we have loaded over here, and when we connect to the smart view, it is taking the 550 because we have applied a trend there. Okay, so this is sorted now, but let's re-upload and check it. Else you can see whole figures are 0 because each and everything is absolutely correct. I have checked one by one manually over here in this sheet, and in this sheet what I get from application. So when I see the difference, you also can see each and everything is 0 without any errors. So this is way how you can do the data validation. And here we have completed with our expense planning. Now I would like to move to the balance sheet planning. Let's check whether the application is loaded or not. Okay, backup is still remains. So till then we will be discussing about the balance sheet planning under the financial planning of EPBCS module. So first let's simply talk about balance sheet. What is a balance sheet? Balance sheet is a financial statement that contains details of a company's assets or liabilities at a specific point in time. It is one of the three core financial statements. We all know this. First is income statement, second is cash flow statement, being the other two, and the third one is this balance sheet. So it is used to evaluating the performance of the business. Okay, every business want at the end of the year or at the end of the financial year, they always wants to know the financial position, right? So with the help of these statements, they can understand, they can briefly check what are the income they have earned during the whole of the year, and how much cash flow would have been taken place in that whole particular year, how much cash is in the application, cash inflow we have, how much cash outflow we have with the help of the cash flow statement. And after that, in the balance sheet, what we have, the assets and liabilities. So under the assets column, we can a company's owner or a company CEO can identify what are the assets they have added during that particular year and what are the liabilities they have incurred, how much more they need to pay within in the next upcoming year, so that they can do a proper planning for that. That is why we are doing here balance sheet planning, right? So after that, the purpose of a balance sheet is to disclose a company's capital structure, liabilities, liquidity position, assets and investments. So balance sheet are an integral part of decision making, strategic planning and stating the integrity of a company's financial health. As we all know, the financial health of a company is most important thing. So that is why the balance sheet purpose is just to disclose a company's capital structure, liabilities, liquidity position, assets and investments. So in this example, you can see these are our current assets. Under the current assets, we are having cash, accounts receivable, inventory. Inventory means the stock we are having, that is also called as current assets. Why? Because when we prepare the products with the help of those stock, those in that inventory, so it will give us a outcome, and it is a short term, not more than 12 months. That is why it is termed under the current assets. And if it is more than 1 year, so it will be termed under long term assets, right? So this is very common thing, we all know this. I'm just give you a recap of this so that it will revise the things. Long term assets will include here the office furniture, vehicles and machineries, each and everything, the long these items which can be used as a capital asset for the company for the long term, more than 1 year. So that will be covered under the long term assets. And subtotal is here they have subtracted the accumulated depreciation, because that cannot be calculated under the assets. Okay, so let's check what is this accumulated depreciation. Backup is failed. Okay, so let's check whether it is completed or not. So maybe it is completed with remaining few things, so that we will check. So when we talk about the accumulated depreciation, so it is the total amount of the depreciation expenditure allocated to a particular asset since the asset was used. Basically, when we purchased any asset, okay, so in that total amount of the depreciation calculated over that particular asset, so that will be termed as expenditure, right, and that is allocated with that particular asset because that is the depreciation expenditure of that particular asset. So that is why we are just subtracting it from that asset so that we can identify the exact value of our asset. Like if I want to sold this asset right now in the market, so at what value I can sold it after deduction of all the expenses like depreciation and all. So that is why that accumulated depreciation is subtracted from the asset. It is a contra asset account, and that is a negative asset account that offsets the balance sheet in the asset account with which it is usually linked, right? So go back to our PPT, and this is all about the assets, and we can always add the assets and liabilities according to our requirement. And here these are the liabilities and capital. So current liabilities include accounts payable, notes payable and other, and long term liabilities here are not specifically classifies. Basically they have showing the capital which contains the earnings, retained earnings and paid in capital. So this is a simple structure. We all know the balance sheet are having various kind of varieties, and today our purpose is to calculate these liabilities or assets with the help of the drivers, because we are doing here driver based planning. And here some assets and some liabilities are like cash, cash and office furniture, vehicles. Some items are like we can use the trend based planning where the driver based planning cannot be used. So we can either apply a trend for that particular for doing a planning, right? So let's do it one by one. And first let me check whether the expense planning is now showing a correct picture or not. I hope now the figures are visible here. Okay, someone is started using the other modules in this particular application, that is why it is showing this error. So we will change. What we can do in this situation, we will go back to the tools and variables and check whether the variables are set or not. So you can see the variables are correct. And from here go to the user preferences, and check whether the things are correct or not. Save this. things are correct and go back to the configuration. It is not showing the expenses we have added. Let me use some other instance so that without wasting time we can cover the things, because we have to complete the balance sheet planning today. Let me try to load my backup again. Let's just discuss the drivers of the balance sheet till then. So this is all about the balance sheet meaning. Now let's discuss about the drivers here. The balance sheet equation follows the accounting equation where assets are on one side, liabilities and shareholders equity are on the other side, and both sides balanced out, right? So the purpose is the both sides should be balanced out. Assets is equals to liabilities plus it includes the shareholders equity. So according to the equation, a company pays for what it owes, or what it owns, that is assets, by borrowing money as a service, liabilities, or taking from the shareholder or investors equity. So the conclusion is a balance sheet is an important reference document for investors and stakeholders for assessing a company's financial status. This document gives detailed information about the assets and liabilities for a given time. Using these details, one can understand about company's performance by analyzing balance sheet. Company owners can keep their business on a good financial footing, right? If talking about the drivers, so what these drivers are doing exactly. So one by one we will be discussing the drivers. It is in progress now. So with the help of Oracle document we can understand this. If talking about a financial driver, so a driver in finance and economics refers to some key factor that has a large influence on some outcome of interest. Macro drivers are influential, fiscal, natural, or geopolitical variables or events that broadly affect the regional or national economy and are used in top down analysis. So, what will be the key drivers in forecasting? So, drivers are the variables that influence or determine your financial results, such as sales volume, price, customer retention, productivity, or quality. As we have used in the expense planning, the drivers for calculating hospital expenses or incomes. Similarly, we will be using the drivers over here for calculating the balance sheet things like assets and liabilities, right? So here I cannot find any strong definition, so I'm moving to my application. Why it is going failed? That is why it is unable to take hold the drivers which we have added over here. Let me try to use any other instance. Just give me a minute, guys. I don't know why it is taking too much time. Now I will try to load my backup in some other instance. I hope it will work now. So where we are having following drivers in our application already present. That is predefined balance sheet drivers. We can say DSO, write off percentage, days in inventory, prepaid expense percentage of operating expenses, that is OPEX, and then accrued compensation percentage of total compensation, that accrued expense of percentage of operating expenses, right? Example I have written over here: banks have a number of very unique needs when looking ahead. They must be sensitive to economic conditions and create plans, and not only forecast future performance but also the forward risk they are assuming. So most importantly, they require tools that accurately forecast net interest margin by accurately modeling the detailed and complex events on a bank balance sheet for both the current look of business and forecasted new volumes. Oracle Financial Services balance sheet planning enables the delivery of accurate margin forecast and comprehensive, meaningful budgets. So now you might understand why we are using this, and how much ways it can be beneficial and useful for us. So one by one, if we discuss the what is the meaning of days sales outstanding. So basically it means, in simple terms, if I would like to explain you without reading this definition, so it means when we provide the products on credit to our consumers, so we would like to calculate in how much time it will take to recover the payment from those customers. So we can say that lower the DSO, it would be beneficial and free from high risk. So that is exactly same written over here, that day sales outstanding is a measure of the average number of days that it takes a company to collect payment for a sale. DSO is often determined on a monthly, quarterly or annual basis. To compute DSO, divide the average account receivable during a given period by the total value of credit sales. It is using the account receivables and total credit sales during the same period, and then multiply it by the multiply the result by the number of days in the period being measured. So DSO will be calculated. You can see this exam formula also: account receivable divided by total credit sales multiply by number of days, right? So let's check whether the application is installed or not. Again, it is taking time, so we will back to the PPT. Here you can see the days in inventory, how we can calculate it and what does this mean. So to calculate days in inventory, divide the cost of average inventory by the cost of goods sold and multiply that by the period length, which is usually 365 days. Basically in a year we can assume the 365 days, and calculating days in inventory can help show whether a company is operating efficiently or not. If someone wants to invest in the company, and that company is a manufacturing company, and or a, we can say, any retail or wholesaler, so they might be interested to know whether the company is operating efficiently or not, right? So for that, these drivers will help them to understand the position of the company, whether should be invested there or not. So days in inventory will be useful there. And how we can calculate, there is a formula is written over here. Actually I have already prepared my data file for the balance sheet. Let me show you. In that the figures in the drivers are already filled, so we can upload it and try to work on the application directly from there. So let me show you that. Basically previously I have already worked on this, so calculated each and every drivers with the help of the formula which I have shown you right now. So with the help of that we have calculated this, and here I have used the point of view exactly which I want to calculate things. And when I upload it, then I will show you how you can do the driver and trend based planning in the application of the balance sheet, right? So yeah, successfully it is completed. Now I just assume that without any interruption we can continue our balance sheet planning. For checking whether the things are correct or not, I'm going back to the expense planning. Yeah, it is absolutely correct, showing the figures. And you can see when we applied the current year actual average, so the calculated figure is automatically giving us a average value, not 500. It is giving us calculated value 550. That is why in the formula it is using this thing and calculate the figure, right? And if we want to remove this adjustment, then we can do that and save it, so the total value will also be 550. So on that basis it is showing the results. You can see now the total is 550. So here we were talking about the difference in the variance sheet, so now you got it. The calculated figure is 550, and here we have taken the 500. That is why the difference was coming. You can see the cost of bad. Let me highlight this. Cost of bad is 550 we have taken, and what's fetched from the application is 550. That is why the difference, because it is taking 550 multiplied by 13, okay, number of patients using beds. So when we will see here, sometimes it is taking the rounding of figure, so that is why also slight difference can be seen. Number of patients using bed, here 13 is taken and 150 is the sum. So let me expand this. So rather than 150, it is 150, you can see here, and the average is 13. It is taking 165. Why? Because we have increased it with the 10% of trend. We have applied a trend 10%. Let's remove this and save again. Now you can see it is 150, okay, and we will do a database refresh, so there will be, you can see the changes. So this is my sheet and I am connecting it once again, or we can refresh. Planning provider error. Okay. I'm quickly creating a user. Let me connect it with the help of Smart View. I'm sorry. Now we will try to connect again. Okay, basically I have created the business rule in some other instance. That is why it is not showing that. No worries. We are now already understood why is the difference and where is the difference is coming. I'm not saving this. So now we are trying to load this data file into our application. For checking, go to the jobs. Yeah, so our data is successfully imported. Now go to the financials, balance sheet. This is the overview basically, and here we will apply to a trend for those drivers, right? First let me increase it with 10%. Okay, it is not showing the figures exactly. Let me check the POVs. Okay, let's change this scenario and year. And try to re-upload this. So it is successfully imported. Now go back to the balance sheet. Now again it is not taking the values. Okay, let me change this because it is selected for the expenses and revenue. So we will be selecting it once again. Also we have to check whether the members are taking as a shared member or not, because in the previous instance I've already working on that, so I've used the shared members, but this is the new instance, so I have to check that. And the backup is also different. So I think it will take time. We are just checking if it is not working, so we will continue it with the next lecture. Rest all the things we have covered. So one member I will take here as expense drivers, and from here also I will select one member. We have to use the exactly same POVs, that is why I'm checking it. Operation US is our entity, and OEP plan is our scenario, working is our version, for 24 is our year, OFS DSO is the accounts. I don't think so this needs to be right here, because the major things we have already written. So let's check again. Okay, so it will take time. That is why I'm ending the session here, and I will cover this balance sheet drivers in the next session. Till then you can revise the revenue and expense drivers. That is absolutely completed. So if you have any kind of queries and doubts, so you can write to our BISP Solutions channel, and this is the website. So I'm closing this session here. Bye bye guys.